So the TSX hitting a record high today, even though oil prices have been under pressure. We saw stocks like Imperial Oil and Canadian Natural declining. There is oil down almost 7%, even though the US and Iran have been exchanging attacks. Our guest says that's an important factor the market is watching. Let's get more from Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management. Diana, thanks very much. Who knew oil down today?
Andrew, if I told you that there were 2 wars and tariffs, would you believe that markets are going to be up 52-week highs?
I know.
It's quite incredible, right? So sentiment, this is what's going on. Sentiment is at odds with market performance. Headline is at odds with market performance. Global equities, Europe is a stock 50 is up 20% year to date. Even the US is up to 2.5-3% year to date. And Canada making 52-week highs with oil right back to where it was when the Middle East pressures started. So not that many bulls out there, and yet markets are climbing walls of worry. We like to say that too much, but it truly is the case.
Look at the US market in particular and Canada. You think that a really strong catalyst for a move further upward may have to wait until earnings season, the next earnings season?
Yeah, you know, with all the negative headlines that we've been getting, investors were kind of worried about earnings. And we had first quarter earnings, which came out fantastic. In the US, it was over 13% earning growth. So we're coming into another quarter of earnings. In the meantime, economic data has not fallen apart. So the economies are still chugging along. And expectations for earnings growth is quite subdued. It's sub 5% growth, which is really not a high bar to meet and beat, perhaps. You know, stocks and sectors that everybody thought were really going to fail in first quarter, like the tech sector and the Mag 7, everybody reported pretty decent earnings. So yeah, we're getting these geopolitical headlines, and you know, we're not selling off. I mean, this is not a political show, but, you know, to the extent that the world could be a safer place, perhaps that is what the market's telling us. We sure don't know. We just know that we don't know. So we have to listen to the market.
Dan, if I could summarize some of your strategies right now, you're redeploying cash and you're moving money into materials and you're adding exposure in tech, uranium and defense. Talk to us about a couple of those themes, if you would.
Right. So in the beginning of the year, markets were starting to be a little bit more treacherous. We look at certain indicators, internals of the market, and that took us out to almost 45% cash in certain places. Throughout the last month, those internal indicators and breadth sentiment indicators and breadth measures have all kind of turned more and more positive. So we have been redeploying that cash. So we haven't gone down 20%. We haven't caught the bottom. We don't want the bottom. But we have redeployed that cash into materials because it does look like there is room for reflationary asset as well as a flight to safety. So that worked really, really well because we de-weighed when it went parabolic, and now we had room to replay some of our favorites. And technology too, we were pretty underweight all year. We have redeployed also in some of our favorites like NVIDIA, Lam Research. We still have Meta, Microsoft, and uranium, Cameco. Honestly, it's been fantastic investment. They own a 49% stake in Westinghouse, a major player in the nuclear industry, in supply reactors, fuel, provides maintenance services. Well, you know the story there. So it's been very, very good to us.
I think we can show some of your stock picks here. They do refer to Cameco. Cameco hitting a record high today. Another name, RTX, formerly Raytheon. What attracts you there?
All right. So RTX Corp is the company that merged United Technologies and Raytheon in 2019. It is really the best looking large defense company from a technical perspective. And what really moves the needle for RTX Corp is missile sales. There's a lot of missiles being fired right now, and they'll need to be replaced. It sells into Israeli missile defense, both in the Iron Dome and David Sling. And there will also be a key beneficiary of the Golden Dome initiative that is starting in North America. So details are scarce for Golden Dome, but it's expected to cost quite a lot, and this company will be selling into that. So that's a good forward-looking project.